Welcome to Policy on Demand, Week in Review. I'm Drew Lyon.
What would you tell clients are your takeaways from this week?
The big data item this week was clearly the release on March inflation. The 8.5% inflation rate over the past 12 months is a 40-year record high, last exceeded in December 1981. Inflation is elevated by the Ukraine conflict, of course, but it was already high in the months preceding the war. We may now be at a peak level of inflation, but it's a much higher peak than anticipated earlier in the year, and it gives a green light for the Federal Reserve to increase interest rates by 50 basis points next month and to continue hiking throughout the year.
Which question related to policy did you get asked the most, and how did you respond?
One question was how the high rate of inflation affects congressional interest in reviving the Build Back Better reconciliation bill. Senator Manchin was quick this week to describe the current inflation as a tax on Americans and a problem that will not be solved by more government spending. Most economists would also say that if the problem of inflation is demand exceeding supply, a tax on business investment can only further impair supply. Senator Manchin had called for a strategic pause last year on the reconciliation legislation, advising we should wait to see how inflation and the economy plays out. It now appears this was wise advice, and the high inflation we are currently experiencing strengthens the case that Senator Manchin is making.
Where should companies focus their attention in the coming week?
We're at the start of companies releasing their first quarter earnings. What I will be paying particular attention to is the guidance companies give for the rest of the year. This guidance will help provide insight into how businesses are gauging the risks to the economy from inflation and from the coming Federal Reserve interest rate hikes.